Hello, my name is Justin and I'm one of the principals of CryptoML. In this video, I'd like to walk you through the market index, which is designed to help inform long-term investors as well as traders. All right, so I think to frame this up, let's start out by looking at a couple of items. We have this excellent quote from Warren Buffett: "Be fearful when others are greedy and be greedy when others are fearful." So our market index is really seeking to capitalize on this, to identify when others are being greedy and identify when others are being fearful. Then we can make our moves accordingly. We have another great little image here. This greed, when everybody's being greedy, if you were to buy up here, or everybody's in fear and you sell, so you're kind of following the herd, you're going to repeat that until you're broke. So let's take a look at what we can do instead. And in fact, one of the best things about cryptocurrency is it has these incredibly fast cycles. So where you may go through one of those fear-greed cycles, maybe in a decade or more in traditional finances, whether that's stocks, bonds, or even real estate, those cycles take a very long time. In fact, if you're a long-term investor and you're trying to play all this, it may take 20 years before you really get a sense of how these things work. And by that time, you've lost out on a tremendous opportunity. So with cryptocurrency, these cycles happen very fast. Sometimes these happen within a year, sometimes it's 2 years. But if you're active in the crypto markets and you have been active for at least like 3, 4, 5 years, you've probably seen a couple of these cycles. And when they repeat, you begin to recognize what those are. So in a way, cryptocurrency has this ability to make you an incredibly effective investor for the long term, because you can take all these principles and apply them directly to other financial instruments. So the market index attempts to take those concepts and quantify them to help you identify when things are entering these extreme greed or extreme fear states, and you can take the appropriate action. Personally, I love the market index. I think it offers tremendous value. It brings in all the right data. And to me, this stands to be one of the best things CryptoML has to offer. So let's take a look at the member dashboard. So here I am on the member dashboard. Just need to scroll down partway in the middle, and you're going to see the market index. So let me break down what the components of this market index are to start. First off, in this green line, we have the price of Bitcoin as it closed on the particular day. So this is a daily plot. And you see we go all the way back to January 1st, 2017. This is added on to every day as we get new values coming through. Up here in the blue area, this is the market index itself. So this is, you can see what it is, how it's moving over time. And there's two more things here. There's this top line and the bottom line. And really, those are the extreme points that we have seen looking back at this historically. So we have this positive 80 line. And basically that's saying if you're getting near that or over that, you're really exceeding the typical value for the market index. So we're probably in this extreme greed phase here, and this is when we may see a market reversal. Same thing goes on the flip side. We have it at negative 100. And as you get values around here and below here, we're probably in the opposite. We're in extreme fear. And if you believe in cryptocurrency and Bitcoin long term, everyone else is freaking out, dumping it. This is the time for you to pick it up and buy it if you're planning on holding it long term. So that's how we can start to identify greed and fear and put a number to it. So looking at this chart, I think let's talk about how it's made up, and then we can look at some of the different patterns that form and how this may have played out in the past. So the different components that come in here is we do have a lot of technical and exchange data. So this is going to be the common things like price, how it's moving over time, comparing it to moving averages. We can look at the different technical indicators that are out there available to us. So this is a big data approach. We can consume all this information. You often hear in cryptocurrency about people looking at golden cross, death cross. That's an example of some data that can come in here. So people will look at that as an exclusive measure of, are we in a bull or a bear market? There's all sorts of different definitions. Basically, if we saw a definition of how you measure a bull or bear market, we tried to bring that into this and apply it to what you see in the market index. But where we really separate is we're not just relying on this sort of data. We're also bringing in social media information, and we're bringing in search information. So if you have been through one of these fear and greed cycles, you will definitely relate to this. As I was back here in my investing days, everyone around me knew I was into cryptocurrency. And so what happened at the end of 2017 is everyone I knew came out of the woodworks and started asking me about crypto. How do I invest in it? What's a wallet? How does it work? I had everybody asking me about it. I'd go to dinner or over to a friend's house, and that was guaranteed to be the topic of conversation. So you had this like huge exuberance, and what that would look like in a from a data perspective is you would see a lot of searches on Google for that, and you would see people talking about it constantly on Twitter, Reddit, other places. So we can actually pull that data in and get a sense of what's that volume, how many people are talking about it, and what does that sentiment look like. Now, on the flip side, when we come down here, what happens is nobody talks about it. So people are not searching for it. The sentiment may be very negative. So you see just a complete fall off. This looks like a very different situation than it did up here. And that's where the magic of the Crypto ML market index comes in, is we're able to aggregate all this data and then transform it into a single quantitative value to help you identify where we are in these different stages. If we come back over to 2021, what happened for me personally is the same exact thing that started happening in 2017. So over here, I had so many people coming to me asking me questions about Bitcoin who were otherwise totally uninterested in it. So this was a red flag to me. I mean, I saw those same exact patterns pop up that happened back in 2017. This allowed me to, slow my personal investment, maybe start pulling money out of accounts, that sort of thing, slow down a little, really consider my risk tolerance at this point. All right, also need to cover the limitations of the market index. So there are a couple of key limitations, and really these are true of anything that attempts to measure, when large market cycles are shifting. So the big problem is a statistics problem. So crypto ML, we're all about machine learning, big data, statistics, math, all that good stuff. And one of the key things you want is, if you're trying to predict something, you want statistical significance. You want ideally thousands of samples of if you're trying to predict when a market's going to turn, you want probably at least thousands of samples of market turning to start to build any confidence in your predictive capability and the data and the patterns that you're seeing, that those actually do contribute, or those are actually the points at which the market is going to turn. So in Bitcoin, in cryptocurrency, we've only had a handful of market reversals. That's not enough to drive statistically significant lines on this chart. However, one thing we can do to sort of hedge this risk is say, we can take this model and apply it to other financial instruments. So we can look at stocks, we can look at even real estate, and we can also look at other cryptocurrencies. So we can take Bitcoin, we can look at a handful of other cryptocurrency, though they tend to move pretty similarly. But what we see is the fundamentals, or the principles, the foundation that this is built on, do apply in almost every financial sector. So you see these fear and greed cycles that happen over time, and they seem to be driven by a lot of the same inputs. The challenge we have is drawing these tolerance lines for Bitcoin specifically. So, what we have is, we have seen that when it exceeds this amount, you tend to see a reversal. When it drops below this amount, you tend to see a reversal, but we really only have a handful of examples, as I said here. So it could very well be that the next time when this comes down, maybe it only reaches negative 95. Maybe it never crosses that negative 100. So we just have to see how this plays out in the future, and it's not going to stick to these perfect patterns that it always has in the past. So if you go back to the investor ideas I was talking about earlier, really what I use this, the way I would use this is, as it's coming down, as it's nearing, this is when I start putting more money into Bitcoin for my long-term account. So this is something I don't wait until this exact bottom and just throw all my money all at once into Bitcoin. Rather, I'm going to wait and start phasing in as we're coming down. Same here. This appears to be, an okay time to invest for the long term, though I expect price to continue to drop down for a while. In fact, like I said earlier, based on everything we're seeing, I could see another 6 months of drop, but that's okay. I'm going to be dollar cost averaging in. And maybe if it does drop below this 100 line, I'm going to feel very confident that we're nearing a bottom. And I'm going to ramp up the amount of investment I'm doing at Bitcoin at that point. Um, Likewise, as we start coming up, you can see as a great example, we did exceed this plus 80 back here at this time, but Bitcoin price had not maxed out. It actually had a huge second leg to go. So this came back down and then it started curving back up. So this is another example of where you can, when you see these extreme readings starting to come in, hopefully you've invested down at one of these points. And if you want to pull money out at that time, maybe you just want to avoid dollar cost averaging as it gets high. But if you do want to pull out some profits, maybe this is a time to start pulling some out. Had you bought down at this 3,000 or at this level here, it would not be a bad idea to start pulling some of those huge profits out at this point. But you could also wait and start pulling more out at this point. And then you see this trend is really starting to turn around. I think this is when you need to be cautious and consider pulling more out, or at least maybe putting the brakes on your trading to see how things play out a little bit. So the limitation we have here is purely a statistical one, and this is going to be true of any pattern, anything someone tells you that perfectly nails the cycles of Bitcoin. That's just not going to be possible to nail that with the right degree of confidence. Okay, that's it. I think I've covered everything about the market index, except possibly the one best thing about it. If you head over to cryptoml.com, you can click on free account, drop on down here, and you'll notice the market index is included for free. So you can sign up for free, register. We don't take your credit card. It's truly free for life. And what will happen is you'll get access to that member dashboard. You receive an email on a daily basis notifying you when the numbers have all updated and cycled. And to me, this is one of the best tools you can have in your tool belt as a cryptocurrency investor. So hope you take advantage of it. Come join us and see what we have to offer. Thank you very much for watching.